And we are live. This is Travis from Carter Cow Capital. Trade with Travis and Expert Advisor Reviews on YouTube. Hope everybody's doing very well on this Monday morning. As we go through and get started with trading and everything else like that, I want to make sure that I end up going through the disclaimer and also make sure that I end up saying thank you to everybody that's watching this or will be watching this in the near future as we end up going through. Take a look at some overall trading activity and everything else like that. Wait for Canva to be able to load back up. My computer is actually going slow this morning, which is very weird because it typically doesn't do that. But um, let's see. I'm going to try one more time. There we go. Good to go. We'll go ahead and go through the disclaimer, and then after that, we get everything else situated. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. So with that being said, as we go through and be able to take a look at everything, I'm going to make sure that I end up putting myself onto the screen. Let's try that over again. Just took that off the screen. Um, we're gonna make sure I end up putting myself onto the screen. Good morning, everybody. I hope everybody's doing very well. Hopefully, everybody's weekend was very well. And let's get to some trading. Let's really get to some trading. I'm super excited to be able to talk this week. Try to get everything else situated and kind of go from there. I'm gonna be honest with y'all. When it came down to us, uh, yeah, when it comes down to trading, sometimes you can be burnt out, and I think I've been burnt out for a little bit. Um, I think I ended up getting burnt out like at the beginning of the year, trying to be able to put up everything when it came down to automation systems and all other stuff. And still working through that process and everything else like that. But I think it's good to be able to say sometimes when you end up getting burnt out when it comes down to trading because all it does is allows you to be able to focus in on some other stuff or kind of sit back and kind of take a step back when it comes down to trading. But feel very good now. Kind of got my wits out of me and kind of got a weekend to myself. So now let's get back to it. Just want to make sure that my sound is good real quick. I want to make sure that my sound is good, and then after that we can jump. We can jump right into it. All right, cool. So here we go. Um, let's start off. We're going to talk about the whole week. Monday, it's going to end up being nothing when it comes down to high impact news. It's going to end up being a trader's day. We got retail sales that just came out with the eurozone actually ended up being negative compared to the numbers that there was a consensus. So we'll see how that kind of plays along. I'm looking at gold right now, and I can see that the United States dollar is actually a little bit strong currently at this particular point. Going into Tuesday, we had the Australian dollar have the interest rate decision. And then after that, Chair Powell is going to end up testifying at 1500 hours. So we'll see how that's going to end up affecting everything. Typically, when he testifies around that time, right around that 10 o'clock time, we'll see how everything kind of plays out. But typically, when Jerome Powell speaks, the market moves. Wednesday is going to end up being our biggest day. We got GDP from the Eurozone. We got President Lagarde speaking. We're going to end up having Chair Powell testifying again. We're going to have the interest rate decision for Canada. And then after that, we're going to end up having GDP from Japan. And so, kind of like last week, I thought that we're going to end up seeing a lot of movement and everything else like that. It was okay. Um, and usually we end up having non-farm payrolls in the first portion of the week. We're actually going to end up having it at the end of this week. So Friday, March 10th, will end up being non-farm payrolls. Expected it's going to end up being for the consensus right now is 200,000, but they haven't placed out that much information. So we'll go back and take a look at that once they have all that information done. All right, cool. So let's jump into where we're at, what's the plan, and everything else. We're going to start off with the United States dollar index. If there's a pair that y'all would like for me to be able to talk about, please make sure that y'all place it inside of the chat box. We'll go ahead and talk about it as we go through and get everything else good as well. So, United States dollar index, we're going to start off with the weekly. From a weekly perspective, this market is in a transition trade type of movement. What I mean by transition trade, that means that about 5 weeks ago, the market was in the buy zone. The daily was in the buy zone as well. Typically the only time that happens is when you're going to end up having a pretty decent move in the opposite direction. Now, typically transition trades means that either a new move is about to start or we're starting to have a strong retracement, and that retracement is going to happen for a few weeks. And that's exactly what ended up happening. The market was at 12,626. I remember taking that sell trade when the market ended up going down to that position, broke out of that consolidation, broke above to 12,960. Currently, right now, we look at it from a stochastic perspective. We see that we're getting a little bit overbought. Last week was a week to where um, the bull run kind of stopped. And essentially, what we're doing is that we're testing this 12,960 area to see if we're going to end up breaking. From a daily perspective, we can see that we're a little bit overbought as well, which means that it's kind of screaming out that we may end up having a little bit of a retracement to the downside first before being able to push up to the upside. But currently, that's weekly. Let's take a look at the daily. Okay. But from a daily perspective, we're looking at a little bit of consolidation over the course of the last 7 days. So last week was nothing more than consolidation. That kind of matches up with the consolidation that we end up having in order for us to be able to break down to this position. So just as hard as it was to be able to break below 12,815, is the same thing as being as hard to be able to break above 12,960 since the market was in that range. That's the position that I'm going to end up paying attention to. I would say if you're looking at this, pay attention to the 2 hours, see how the market's going to end up reacting. Currently, right now, we kind of have a built up consolidation level that we can be able to take a look at, and it's kind of defining exactly where we are, which is actually pretty good. Um, in which I would say our natural support is at this low at 12,907. So I'm going to say 12,905. Uh, we could say a whole number, but I'm just going to say 12,905. I'm going to change that color to um, go to blue on this one. Make it a light blue. There goes our support. Our resistance currently right now is right here at 12,990. So currently right now, as long as the market stays inside of this overall price level, not going to end up making a move, but we can go ahead and start to build out what our plan is going to end up being once it breaks out. Once it breaks out 12,990, remember we end up having a trade from 12,960 to 13,070. If it does break up, that would be the position I would like to be able to get out or be able to get in and then get out at, which would be from right here, which will end up being a take profit. And our stop loss will end up being at this particular point. We don't have a low that's very close to the top of the resistance. So I would say we'll place it below these lows right here, which will make it a one to one, or I'm sorry, a little bit less than a one. Yeah, probably about a 1-to-1 risk reward ratio. So I'm going to be a little bit more patient when it comes down to this buy trade. But I do like what I see. The stop loss is going to have to be below 12,950. So we're going to risk 40 points to be able to go out there right around 80 points at this particular point. Once the market kind of builds up a little bit higher and kind of gives us a move like this, where it pops up and then after that gives us that last retracement before being able to break out, that's where my stop loss will end up being. It'll be just below that overall low. Type in a while, yes, if that makes sense for the buy trade. Haven't built out the full game plan, but that would be the idea. Sell trade, if the market goes below, we're still inside of this overall block. I would say that there's a better chance of the market pushing to the upside than it would be to the downside. But if it does fall, it'll be 12,906 back to the natural support, which will end up being down here. I wouldn't look at being able to trade it below because I haven't broke below 12,815 and stayed below. So that would be my game plan from there. If I'm looking at being able to sell this or if the market breaks below, then take profit will be back to the natural support. So it'll be about right there. Stop loss will be above the swing high. That will end up being just above one of these overall fractal highs that we end up seeing previously. But once again, still don't have a game plan yet on that. But currently, right now, I wouldn't do anything. But we'll see how the market kind of reacts off of that. All right, let's go to oil. Oil, we haven't made a move since November of last year because the market was in consolidation. Currently, right now, not going to do the same. Still not going to do the same thing. This is great for people that love being able to trade, grids. For people like me that like to be able to trade breakouts, this has not been a pair that I've been pretty much interested in at all since November. So currently, right now, still nothing to do. The resistance is at 82.50. The support is at $70 a barrel. Once it breaks, I believe that it could go all the way down to $63 a barrel if it falls to the downside. If it breaks to the upside, I believe it can be able to go to $94 a barrel to the upside. So currently, right now, I know a lot of people that have been trading gold that has been seeing a lot of trading oil that has been seeing a lot of success. But the people that have been seeing a lot of success have been using a grid method to being able to trade. And because we know what the support and resistance is, it's kind of easy to be able to trade inside of that level and be able to make money on both ends. I'm just not one of those people that trades that style. Okay, so take that away. Let's take a look at gold. I'm looking for a trade today. Really would like to trade today. Um, let's take a look at the weekly. Weekly on gold. We're inside of the long-term consolidation with a resistance at 2070. The support was at 1616 when the market ended up falling. Market ended up pushing up, just like that transition trade that we ended up talking about overall about 4 weeks ago. The market ended up rejecting off of 1940 or rejecting off of 1950, and then after that falling back. From there, the market has started to consolidate. Where the actual low was at 1808, we ended up having a take profit be hit a couple weeks ago, actually last week when it came down to that trade. We take a look at this from a daily perspective, looking at being able to see if we wanted to be able to buy. There was a counter trend line break that ended up happening, which was right here. We ended up talking about being able to get into uh, in full transparency. I did not take that trade back up to the upside because I was focused in on the sell trade. But currently, right now, if we take a look at it from a daily perspective, we can see that the market is a little bit overbought on this one as well. Um, from a 2 hour perspective, we can see that the market is kind of falling off. Uh, okay, that is right. Okay, okay. I set up a game plan, but I did not take the trade. That was that had to be on Thursday. I set up a game plan where the counter trend line break above 12,000. Above 1835 will end up being a trade. We'll look at being able to get out of the 2 hour D extension. The 2 hour D extension was at 1850. So it did happen. That sucks. Wish I would have took that trade. Um, okay, so with that being said, the market is going through a second phase of Fibonacci's. It fell down to the 382, which makes the market healthy. And then after that, has retraced right around the 127, which was at 1856. Currently, right now, because the United States dollar is starting to show a little bit of strength in the morning, I would not look at being able to take a trade right now. What I would do is try to see if the market is going to give us another counter trend line break to be able to get back into. Typically, when you have one counter trend line break, the second one is typically going to end up coming somewhat quickly. But I will pay attention and see how the market kind of reacts to kind of falling back down inside of this sweet spot area, and then after that, look at being able to make a move from there. Once the counter trend line break happens, then after that, be alert, be able to take the trade. But that's also saying that the United States dollar is going to end up being weak again, um, which kind of makes a little bit of sense because we looked at the United States dollar index. No, we said it looked at the United States dollar index and said that we thought it was going to fall. Let me go back to that. Go back to that real quick. No, we said the United States dollar index was in consolidation ahead, and if it broke up to the upside, then it had to break above 12,990. Okay, so with gold, I'm not going to make a move yet. It's not aligning with the United States dollar index either yet. It's in consolidation before the move will actually be made. Okay, cool. So I'll stay away from that for right now. Let's take a look at Bitcoin then. Bitcoin. Da, 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 da. Well, that did exactly what I thought was going to happen. All right, cool. So Bitcoin, from a daily perspective, market was in long-term consolidation. Um, Fell all the way down to 16,000. Since then, they ended up popping back up. Uh, there was a consolidation high of 25,000, where the market ended up rejecting off to. We start erasing some of this mess. Don't need half of the stuff that I got in here. I need that resistance. Okay. I got the the resistance to those? Okay. So when the market ended up pushing past pushing up to 25,000, it ended up quickly rejecting. Currently, right now, we look at the previous consolidation that ended up allowing us to be able to push up towards that level. The natural support was at 23,310. Currently, right now, the market's at 23,310 as the natural support from there. Now, question is very simply put: is this market gonna keep on rejecting? And if it is going to end up keep on rejecting, then it's going to end up falling back to this natural support at 20,500 before actually being able to push back up to the upside. If the market is going to continue to keep on falling, but that goes against what I've been looking at this morning. Actually, no, it doesn't go against what I've been looking at this morning. We're just seeing that the United States dollar index is going up. See, United States dollar index is going up. That meant that we took a look at gold. Gold was going down slightly, but it had a chance of being able to push back up. Bitcoin is looking like it's doing the same thing currently, but it's in the buy zone. Okay. Back inside of this long-term consolidation. Really, the free area is at 25,050. Currently, right now, we're in a 33% area. What I mean by 33% area, everyone, is that we are inside of a long-term consolidation that really and truthfully, if you were to trade inside of this area, unless you're trading grid trades for its breakouts and counter trend line breaks and everything else like that, you'll probably only win 33% of the time because the market has not figured out what direction it's going to end up being. Because of that, I'm going to stay away. If we look up in this blue area right here, we can see that when the market broke below 29,000, it was a free run all the way down to 25. We look at this when it popped up the first time that they ended up doing it. It had little to no hesitation from that 25,000 area to 29. As the market stays inside of this consolidation area and kind of builds out price until it actually breaks out of that area, I'm not going to be interested in being able to do nothing unless it falls back down to 18,000. If it falls down to 18,240, then I'll be a heavy buyer again because I know that's the natural support. And we'll kind of go after that. Anybody else have an idea on that one? Anybody else like that idea? Anybody else have an idea or have something to say about that one? Or trading Bitcoin? Like to be able to know somebody's opinion. But currently right now, I'm staying away. US 30. Talk about what the game plan was, and currently where we are right now. And 33% areas just don't happen with one singular style of trade. It can happen in anything. Would you buy Bitcoin for 0 to 1% right now? No. I'd rather get better value. And every time that I end up placing in money on Bitcoin, I'm looking at being able to find it, especially if it's going up at a natural support. I loaded up right around 18,000. I wish I would have got more at 16, but I loaded up at 18,000. So from an Ikimoku standpoint, currently right now, we're in an area of flux. We're in an area of consolidation. We can clearly see that in the middle. We can also clearly see that with our high volume nodes. We're in a price action area where there's not going to be a lot of decision on where the market is going to end up moving. Currently, right now, we see that the natural support is at 32,530, which is right here and right here. Natural resistance from a daily perspective is at 34,410, which is up there. So anytime that the market ends up breaking above that area, that will be the time that I will look at being able to heavily trade. So if it closes above this area and starts pushing up, that's the area that I want to be trading. If it breaks below this area and it pushes down, that's the area that I want to be trading. Anywhere in this middle area currently right now from a daily perspective is a very low value trade, or in our case, a 33% trade because we're trading with high volume. We're trading in a high volume node. My number one rule when it comes down to teaching all of this and all of the stuff that I end up talking about is do not trade in high volume notes unless you're trading a grid style system. It does not make sense to trade inside of consolidation. I don't care how pretty it actually looks. This is where people actually lose money. All right. Now, with that being said, let's talk about the trade that we took inside of this area. Last week, we ended up taking two trades. So it ended up taking us a long time to be able to have this trade kind of play out. Um, there was a large consolidation that ended up happening from January 26th all the way to February 23rd. The market ended up breaking out of this area 33,500. We ended up getting out at 33,300 and end up finally hitting take profit at 33,540. Since then, the market has pushed back up. That was the natural support from there. And the market has started to be able to get back inside of this little consolidation area. We can see that it rejected right off of, and I love when this happens. It rejected right off of this previous consolidation right here that ended up happening from December 15th all the way until January 10th. So currently what's going to end up happening? I do expect that the market is going to fall down at least to this midway point. Once it falls down to that midway point, then after that, we'll see if consolidation kind of builds up. If that does happen, then after that, I will look at being able to trade. Now, the area that I'll look at being able to trade will end up being from 33,150 up to 33,600, which would be basically that natural support area. So that little hole right there will be the area that I'll look at being able to trade. Anything else? Not interested in. So I'm gonna let this one kind of play itself out. There's no trade today. There's probably not going to be a trade tomorrow on this one. This one will probably have to be built out and let other people kind of define what the natural support and resistance are going to end up being before actually being able to jump in. So if you are a person that loves trading US 30, I would suggest against it at least for the next couple days. The move that we got has already been made. We made that last week. It was a 700 point move. So the patience of it allowed us to be able to make that move. Currently, right now, there's no great trade on that one. Last one, NAS 100. So NAS 100 is at this point basically inside of this low volume node area. There's a better trade of NAS 100 in this movement because of it being inside of this pocket area where it had a free run. It had a free run over here and a little bit of, even though there was a little bit of time and patience into this one, it was still a large gap move to the downside. Now, with that being said, this one has to retrace as well. I would like to see this one retrace before being able to make a move off of this one. We end up having a sell trade off of this one. We took profit when the market started the U-turn. If you did not take profit when the market started the U-turn, then you pretty much lost the trade. Not a bad trade to lose, but we was up in this position. If you stayed in the trade, or if you got out of the trade, you could have made at least 220 points off of this one. Just gonna see how it kind of plays out. Now, ultimately, we're inside of this little W pattern here, here, and here. What I would like to be able to see is the market falls down to basically the resistance or support of this overall area. And if it breaks the counter trend line break, then I may end up looking at being able to get in to be able to buy back up to this point right here. And then have a pending order from here to there to be able to take advantage of as well. But I got to see this market fall down first. If it falls down, then after that, I'll be interested in being able to take that trade. Currently, right now, I'm in a waiting block. I don't want to take the trade within that 12,240 area. I would not look at being able to buy or sell in that 12,250 area to 12,360 area. That 100 point area doesn't make any sense to be able to do it. If it falls down below 12,245, then I think it'll fall back to 12,120. If it gets down at 12,120 area and it finds a little bit of support, that would be the area where I would like to be able to trade. And that's pure price action, everybody. I'm not looking at any other indicators or anything else like that. I'm just looking at it from a price action perspective and volume profile. If it goes down to those areas and it turns around in that pocket, that'll be the area where I'd like to be able to get in. Okay, so we'll wait on that. We'll talk about that one a little bit later on today. See if something ends up happening off of that move. If you like what I end up doing, please make sure that you end up clicking on the boost button. Please make sure that you end up subscribing to Expert Advisor Reviews, as we have a review that's coming out this upcoming week. Actually, we have 2 reviews that's coming out on this upcoming week. And then from there, we'll see how everything kind of plays out. No trade this morning, unfortunately, unless you're scalping or unless you have a grid system. But we'll end up kind of going from there. Like always, make sure that you end up planning your trade your plan. I'll see each and every one of y'all again tomorrow, same time, as we go through and take a look at some trading opportunities, and hopefully we'll have something that we can be able to go from there. All right, we'll go from there. All right.